Hello everybody, welcome back to my channel. So First REIT has just released its first half 22 numbers, and I looked at the presentation, but I'm actually looking just at one thing, and that's the asset reshuffling that they have. There's a fair bit of asset reshuffling, jiggling in the portfolio since the rather major restructuring that they did last year. So that's what I'm watching. But first, let's go through the financial numbers just a bit, and then we talk about the asset reshuffling. So this is the financial numbers. DPU is up because of the contribution from the Japanese nursing homes acquired, and also the rental escalation since the restructuring last year. So not much of a surprise. The NAV went down because they issued equity to sponsor for the Japanese homes acquisition, and post issuance the parent sponsor holds 33%. Also not very surprising. I think this is quite interesting. Look at it, a few things to note. First of all, there's a big chunk, 55% of the debt is going to come due in March 23. So it'll be interesting to see, right? In this rising rate environment, where they will be able to refi this chunk. Is it going to be higher or is it going to be lower or what? And what kind of maturity would they get, right, from the lenders? How supportive they are for granting a loan. So that's the first thing to watch out for. It's quite a sizable chunk, right? 55%. The second thing to note is that interestingly, the cost of debt actually went down from 4.2% to 3.7%. That's rather surprising because you are talking about a rising rate environment, right? But you can understand it in two ways, right? First of all, when they bought the Japanese nursing home, they took out the Japanese loan, right? And that stuff has a low interest rate, right? So that lowers the cost of debt in the first place. The second thing which was quite interesting was this thing called a social bond that they issued, and apparently it was irrevocably guaranteed by this Asian Development Bank. I don't think I've seen this very often happening. So it's quite a first time I've seen this social bond. Apparently they have to fulfill some kind of social stuff to be given this bond. But if you look at it, it's actually a pretty low yield, low cost of low interest bond, just 3.25%, right? So much lower than their 4.2% cost of debt last year. So you can see that they've managed to lower down the cost of capital this way through the yen loan and this funky looking social bond. Quite long tenure as well, right? 5 years. So that's quite interesting because you have a rising interest rate, but seem to have be able to lower their cost of debt in various ways. So maybe they get a bit of credit cost lowering with the successful restructuring. So I think this is something that all eyes will be on next year. What's the cost of debt after restructuring? Are the lenders more confident after the major super big restructuring, which involved a really hefty equity raising exercise? So that's something interesting. They also held an EGM. So you see, a lot of things really happened, right, for the past 1 year. To approve this divestment of this Surabaya hospital. And the pro forma DPU impact is quite a fair bit. It's going to drop by 2.6 cents to 2.28 cents. So I think the market took it quite negatively. And this is the pro forma effects. But I'm not sure though. Are they gonna do some capital top up to bring the DPU at least to a somewhat same-ish level as last year? So this is something you have to watch out for the next few quarters or next 1 year. What would be the plans for the capital that we receive from the divestment? Because if you have the income void from this hospital, then the DPU will drop, right? So it'll be quite important to see what the manager does. Which brings us to the last point, and that's what I said, the most important thing, which is the acquisitions and asset reshuffling. So this was the EGM item, and actually it's quite interesting because the REIT is going to receive quite a fair bunch of money. First of all, there's going to be a settlement amount, right, of $30 million, received already in June, so 30 million of cash. And then after that, when you sell the Surabaya hospital, you're gonna receive a bunch of money. And apparently during the EGM, they said it's something like $40 million, right? So if you take $40 million and add the $30 million, they have $70 million to come in. Actually, $71 million to come in. And actually, during the final year, sorry, the first half presentation, they also showed this stuff, right? That this Imperial Hotel and Country Club, with expiry in 2022. So apparently, this stuff is carried in the books at $32 million. So if you take $32 million and you add the $30 million, you add the $40 million, that's almost $100 million, right? More than $100 million that they will receive if they successfully sell off this property, right? Which I think they have identified as a non-core asset, looking to sell it if there's a willing buyer or something. So if they are able to actually sell this stuff, then actually it's a fair bit of capital coming in, right? $100 million. So what would they do with this money? Very interestingly, during the EGM, they said they aim to increase their exposure to developed markets to greater than 50%. As right now, the portfolio is basically Indonesian, which is a huge chunk, right? If you look at it, 88% is Indonesia, and developed markets is only 12%. So they want to grow this portion from 12% to 50%. And then if you look at what developed markets mean, I think they mean Japan, Australia, UK, Europe, and the US. So actually, it's a fair bit of capital reshuffling if they really want to bring this chunk to 50%. And gonna do it here. And so what's gonna be the yield, MPI yield, cap rate when they acquire such properties, and especially in face of a rising interest rate environment. So I think this is the main thing that the markets will be watching on for the next few quarters for this REIT. So nothing much to talk about actually, but this is one big focus that I think the markets will be focused on. So we've come to the end of this video. If you like what you saw, remember to subscribe, like, share, and comment. See you guys. Adios.